All right, let's have a look then at these assertions in the accounts. All right, has changed recently, and so you've got assertions regarding transactions, which you can think of as basically being the income statement, the P&L account, and the SFP on the account balances, but also all the disclosures as well. Now, what are these assertions? What do they mean? Right, first of all then, all we're looking at is the left-hand side here, the profit and loss account. Every profit and loss every profit and loss transaction, we have to say to ourselves, did they occur? Is it complete, etc., etc. So what do we mean when it says, does it occur? Well, we said, has the transaction actually happened? Okay, so I see sales in there. Has it actually happened? Are the sales genuine? And so the test to see if the sales are genuine, let's take a sample from our sales nominal ledger and let's trace back to the invoice, and then from the invoice we'll go back to the goods dispatch note, and from that we'll go back to the very original order. And by checking all the way backwards, then we can prove that it actually did occur, that it actually did happen, that this sales we've got in the accounts is genuine. The opposite of that is, are all the transactions recorded? So the completeness assertions, are they all recorded? And so here, from the order, then to the goods dispatch note, then to the invoice, and then to the sales nominal ledger. And that's just saying that were all the orders, so we take a sample of orders, were they all in sales? So therefore, was sales complete? And can you see how these two are in a different direction? Okay. Right, let's keep going. So, that's occurrence, that's completeness. Accuracy, that there's no errors in the accounts. So how can I test that? Well, you could recalculate things. So you could recalculate the payroll for wages. You could review control accounts, because the reason they do a control account reconciliation is to make sure that the numbers are right. Another thing that we need to be careful of in the income statement is cut-off. Are all transactions recorded in the correct period? So what you do at the stock take, you take the last goods received note and the last goods delivered note. So anything coming in, goods received note, well, that should be in purchases. So you check that to a purchase invoice. And anything that's now gone out, the last goods delivered note, well, that should be sales then. So you should check that to the sales invoice. Classification, that the transactions are in the right account. Well, simply take an invoice then. So for example, a purchase invoice, and let's check it's in the right nominal ledger in the accounts. Presentation, a new one. Disclosures should be easy to understand. They should be aggregated and disaggregated properly according to materiality. So an example of this would be what you could do. You could take the total employee benefits, so the total figure, and then disaggregate it, split it all down in the notes to wages and salaries, split it in between that and pension costs and tax and NIC. Okay, so you've got here maybe one figure for total, and that's the aggregation, and this is the disaggregation in the notes. So they split it up enough to make it easy to understand in the notes. So that's the sort of things you can do on the income statement for transactions. What about balance sheet then, when we come to test the balance sheet? So let's have a look at that. Existence, same as occurrence over there. Does the balance, does the asset or liability, does it actually exist? Okay, so does it actually exist? Well, go and have a look. If it says there's some PPE, go and physically verify it. Then you know it actually exists. If it's a receivable, you could do your circularisation of receivables to see that they actually exist. if it's bank loan, a bank account that you want to know, send a letter to the bank. Find out, does that account actually exist? Are all assets and liabilities recorded? Have we got them all? So, for example, you could review the repairs ledger to see if there's anything that actually wasn't a repair, was an improvement, and so it should have gone to capital. So you're making sure then that the PPE is complete. Accuracy, we said no errors, including things like overhead absorption and that sort of thing. And we could recalculate again, we could recalculate depreciation to make sure depreciation is valued correctly. We could, for accuracy, we could just, how could we verify the accuracy of the cost? Well, just check it to the purchase invoice, that sort of thing. How do we know that we actually have the rights or the obligations to these assets and liabilities in my accounts? So how do we know that we've got the legal title or the control? Well, if it's a piece of property, we could check it to the property deeds, couldn't we? If it's a loan, we could check it to a loan agreement, that sort of thing. How do I know that everything is in the right accounts? I can get myself a purchase invoice, and if it's not paid, that should be in payables. I could check that some research expenditure has gone to the income statement and not the SFP, because it only goes to the SFP if it's development expenditure. How do I know that all the disclosures are easy to understand, etc.? Well, what you can do is you can use disclosure checklist nowadays that says things like, have you disclosed the PPE cost, the depreciation, any revaluation, etc., etc. So, these are really important. It might not seem it to you, but everything in the balance sheet, so everything in the accounts, whether it's in the P&L or whether it's in the balance sheet or whether it's a disclosure, we can now audit those figures. And these are used when we do substantive procedures. So I want to kind of just show you how am I going to use this in the exam. So in the exam, if you get a question asking for substantive tests, substantive test means you test the financial statement directly. But what you're actually testing is their assertions. You're testing, are they complete? Did they exist? Are they accurate? Is it in the right period? Do we own it? Do we have an obligation? Is it classified correctly? Is it presented properly? So these assertions are really helpful. So if you get a question about substantive tests, about PPE, then these assertions will help, because you might be stuck in the exam and you might think, oh, I don't know how to test PPE. Yeah, you do, because what you do is you say, right, well, what are the assertions over PPE? And you think to yourself, yeah, how can I check whether they're complete? How can I check whether they existed? How can I check whether we've got the rights? How can I check whether they're valued correctly? How can I check whether they've been disclosed properly? That sort of thing, okay? Now, I always use this for substantive tests. I always say, right, AEIOU, you could do analytical procedures, you could inquire of management, you could inspect things, you can observe things, you can recalculate things. AEIOU, alright? And again, that's just my way of helping you think of substantive tests. Well, the other way of helping you as well, as I said, is think of the assertions. So let's try and do it. Let's think of, for example, valuation. Okay, so valuation or accuracy. What I could do, I'll put the valuation in the Y column, and I could say, right, well, I could recalculate depreciation. Why am I doing it? To verify its, well, not valuation, but to verify its accuracy. There you go. All of a sudden, so this would be the depreciation calculation. All of a sudden, I've got myself one substantive test. Really easy. Now let's have a look at the rights. How could I check whether we've got the rights to this piece of property? Easy. I could inspect the property deed. Why? To verify the rights. And that'd be my whole answer, you know. This is brilliant. So how can I check whether the PPE actually exists? Couldn't I go and inspect? Couldn't I go and physically verify the asset? Why? To ensure it exists. How could I check that they're complete? Well, didn't I say I could inspect the repairs ledger to see if anything should be in capital, and therefore I'm checking completeness. Okay. Disclosure. I could look at. Don't you have to use AEIOU? Look at a disclosure checklist to ensure things have been disclosed properly. How could I use analytical procedures? I could maybe have a look at the percentage for depreciation, that sort of thing, as compared to cost. Lots of different ways of doing it, but all I'm trying to show you here is how this little thing, these assertions and these AEIOUs, will really help you in the exam come up with substantive tests. So what I think is the hardest thing for most students coming up with substantive tests, use the assertions, use the AEIOU, and it actually becomes quite straightforward. So it's really important, I think, to learn these assertions. One final thing I wanted to do with you, have a look at this question with me. Which of the following substantive procedures gives evidence of completeness? So let's have a look at the first one. You select a sample of assets in the non-current asset register and you verify them. So if you're verifying them, are you checking completeness or are you checking that they exist? And I'm hoping you're saying I'm just checking they exist. That's checking existence. What about B? I review the repairs and maintenance account to identify if any of them are capital and therefore should be in non-current assets. Is that testing completeness of non-current assets? Yes, it is. I'm checking, is everything in there? So that's completeness part B. So that's the right answer. Let's have a look at C though. What's this? For assets disposed of, look at the sales proceeds and cash book. So I'm looking at the amount I received. What assertion is that? The valuation, the accuracy. Okay, hope it all helped.